वेरी गुड इवनिंग टू ऑल ऑफ यू। कैसे सब लोग? होप ऑल आर वेल। टुडे टॉपिक again the second class on the ITC chapter. We have completed section 16. Today we are going to start section 17. Section 17 says that apportionment of credit. Then they are also talking about block credit. Meaning thereby, in the section 17, we will talk apportionment of credit. Why there is a requirement of apportionment? Because you are not entitled to take the full input tax credit. Apportionment means you are dividing the credit. Why you are dividing the credit? Because we will discuss the reason and the situation. And also it talks about the block credit. Where the goods or services or both are used by the registered person partly for business and partly for any other purpose, meaning thereby the use of that input tax credit is partly for business and partly for other. If this is the case, we would be allowed to take the ITC, which is restricted for the purpose of the business. Now, how to calculate that the ITC, which is used for the business, and ITC, which is used for other purpose? For that, we are going to discuss two rules, Rule 42 and Rule 43. You all have cleared your CA Inter. This is my first question. What is the difference between the Rule 42 and Rule 43? Please tell me the difference कि Rule 42 में क्या difference है और 43 में क्या difference है? Waiting for your reply. I know that credit, which is to the extent of the business purpose, I would be allowed to take the ITC to the extent it is being used for the purpose of business. It means if it is business and other, then we will take the ITC to the extent of the business for which we have two rules in place, Rule 42 and Rule 43. My question that what is the difference between Rule 42 and Rule 43? The difference is Rule 42 talks about input and input service, and Rule 43 talks about capital goods. Thank you so much for your lovely participation. Correct, Viraj. Coming back, 17 subsection 2 says, if you are using the ITC, commonly for taxable supplies as well as exempt supply. It means in the 17 subsection 2, it says that you have the two supply. One is taxable supply, one is exempt supply. How much ITC would be available? Again, simple, to the extent of taxable supplies. point to be noted, the zero rated supply is considered as taxable supplies. What is the meaning of zero rated supply? What is the meaning of zero rated supply? In the GST, the word is being defined zero rated supply. What is the meaning of zero rated supply? कौन सी सप्लाई जीरो रेटेड होती है? प्लीज गिव मी द आंसर. But the concept remains same. Again, if you have the common ITC and you have the taxable supply and exempted supply, you are allowed to take the ITC to the extent of taxable supplies. How you will calculate? According to the rule 42 and the rule 43, which we are going to discuss in detail. Correct? So the word zero rated supply has been defined in the GST. The word zero rated supply has been defined in the GST. The two type of the supply, one is export and one is SEZ, is considered as zero rated supply. And what is the zero rated? Zero rated is considered as taxable 17(2). Now, what is the meaning of exempted supply that have been given in the 17 subsection 3? Meaning of exempt supply has been given in 17 subsection 3. But they have enlarged the scope of exempt supply only for the purpose of reversal of common ITC. 17 subsection 3 has defined the term exempt supply, but that term which has been defined exempt supply, that is only for the purpose of 17 subsection 2. What is the 17(2)? 17(2) says that if you have the taxable supply as well as exempted supply, then ITC used commonly, then you are allowed to take the ITC to the extent of taxable supplies. Correct? Then what is the meaning of exempt supply? This word has been defined in 17 subsection 3, but this is only for the purpose of 17(2). It means we are enlarge the scope of exempted supply. Why we have enlarged? So that the reversal amount would be comparatively larger. The value of exempted supply shall be such as may be prescribed and shall include supplies on which recipient is liable to pay the tax on reverse charge basis. It means recipient are paying the tax on RCM. It means outward RCM in the hand of the supplier will be considered as exempted supply. I am advocate. I am rendering the services to you. So my outward supply, you are paying the tax and the reverse charge. So in my hand, because if I see supply is taxable, that is the reason recipient is paying the tax. Correct? Supply is not exempted. Supply is taxable, but for the purpose of common reversal. 17(2). It says that outward RCM would be considered as exempted in the hand of the suppliers, or for me, it is exempt supply. For all purpose, no. Only for the purpose of 17(2). What is the 17(2)? What is 17(2)? Reversal of common ITC. Value of exempt supply shall be such as may be prescribed and shall include supplies on which recipient is liable to pay the tax on reverse charge basis. Transaction of securities. Fine. Sale of land and completed building. Why I am saying completed building? Go to the schedule 3. Go to the schedule 3. In the schedule 3, there are total 8 activity or 8 paras are there. Out of which para 5 and para 8A are considered as exempted and rest are not exempted. Not exempted means, it means there is no requirement of reversal of ITC. In the schedule 3, only because of these 2 para, which is considered as exempted supply, which is considered as exempted supply, you need to reverse the ITC. But if you have the schedule 3 ka supply other than these 2 items, you are not required to reverse your common ITC because it is not exempted supply. Let's read the explanation. Explanation says, for the purpose of this subsection, the expression value of exempt supply shall not include the value of activity or the transaction specified in schedule 3 except. What is except? The value of activity or transaction specified in para 5 of the schedule 3. Then value of activity or the transaction as may be prescribed in respect of the clause A of para 8 of the said schedule. If you sell the land, do you need to pay the GST? Answer is no. Why not to pay the GST? Because it is covered in the schedule 3. What is the schedule 3? List of activity or the transaction which are neither supply nor goods. Neither supply the goods nor supply of service. If we sold completed building, why I am using the word completed building? It means schedule 2, para 5, clause B talks about under construction. Schedule 2, para 5, clause B is talking about under constructed building. So they are using the word subject to clause B, para 5, schedule 2. It means they are talking about under construction building is taxable. So if you sell the building after completion, it is out of GST. Why out of the GST? Because it is covered in the schedule 3. So first para, which is covered in the schedule 3, first para, for the purpose of reversal of common ITC out of the all transaction of schedule 3, this first transaction is considered as exempted supply. So value the activity or the transaction is specified in para 5 of the schedule 2. What is being specified? It is being specified that sale of land and completed building. Okay. Next is para 8A. 8A talking about value of the activity or the transaction as may be prescribed in respect of the para 8 clause A of the schedule 3. When you read the para 8A, it talks about the warehouse goods sold before filing bill of entry for home consumption. It means before filing the bill of entry, if you sell the warehouse goods, goods has been reaches to the custom, it's lying in the custom bonded warehouse. But before that warehouse, before that particular filing the bill of entry, you are making the sale of that warehouse goods, then it is considered as exempt supply only for the purpose of reversal of common ITC. 17 subsection 4 says banking company, financial institution, NBFC engaged in supplying the service by way of deposit, loan, or advances shall have the option to either comply with the provision of 17 subsection 2 or every month they have to avail 50% of the eligible input tax credit on input on capital goods on input service and rest will lapse. ठीक है? It means if I am a banking company, there would be some exempt supply like interest. There would be some taxable supplies like processing fees, etc. on that particular loan or credit card loan, that interest is taxable. If I am banking company or NBFC or financial institution having two type of the supply, one is exempted, one is taxable. Can you give me the example of exempted? Answer is yes, interest on long-term loan advances. Example of taxable? Credit card loan, processing fees, service charges. They are providing n number of services. So if banking company having taxable as well as exempt supply, we can say 17 subsection 2 will come into the picture. Yes. As so it says 17.4 says either you have the two options. Either go for 17.2 or straightforward 50% reversal. But again, for the purpose of reversal of the 50%, they have given relaxation to one item. They have given the relaxation to one item, provided that option once exercised shall not be withdrawn during the remaining part of the financial year. The first point, that option once exercised shall not be withdrawn during the remaining part of the financial year. Second, provided further that restriction on the 50% shall not apply to the taxes paid on supplies made by one registered person to another registered person having the same permanent account number. My humble request to all, please tell me which type of the so what can be the technical name to this type of the if I say one PAN multiple GSTN, what could be the what could I give the technical name? If there is a one PAN and multiple GSTN, what could be called then? What can be the name to be used for that type of the entity? अगर एक पैन है और मल्टीपल जीएसटीएन है, करेक्ट राई, आप लोगों ने जो मुझे नाम दिया ना, आंसर दिया था ना, exempted zero rated supply is export and SEZ. There are two type of the supply, export and SEZ are called as zero rated supplies. Apart from that, no supply is zero rated. Yes, right. So we are Calling one pan multiple GST and technical name is distinct person. Now, suppose give me the answer to this practical problem. ICICI Bank, and let's say it is located in Delhi, is raising the one tax invoice to ICICI Bank, Mumbai, having the tax component 20,000. Similarly, HDFC Bank has raised the tax invoice in this Mumbai branch, and there is an GST of 30,000. Input, other than that, input is 50,000. Input service is again 40,000, and capital goods is, let's say, 60,000. So I can say the total ITC is 2 lakh. You are requested to calculate and tell me out of rupees 2 lakh, how much ITC they are eligible, or I can say how much ITC they need to reverse. आउट ऑफ रुपीज 2 लाख उन्हें कितना आईटीसी रिवर्स करना पड़ेगा, या फिर कितना आईटीसी के लिए वो एलिजिबल है. कौन? आईसीआईसी बैंक मुंबई, हु हैज द टोटल इनपुट टैक्स क्रेडिट ऑफ रुपीज 2 lakh. Over to you for giving the answer. कितना आईटीसी रिवर्स करना पड़ेगा? Should I show you the provision? Let me go back to the provision, and we are talking about 17 subsection 4. We are talking about 17 subsection 4 on which I have made the practical case study. How much ITC need to be reversed as per the 17 subsection 4 read with rule 40 to 43. You have to tell me the amount कितना ITC रिवर्स करना पड़ेगा. How much ITC they need to reverse out of rupees 2 lakh. Thank you very much, Mr. Muhammad Abdul Rahim. Your answer is absolutely correct. Right answer is absolutely correct, 90,000. How the 90,000 came? Let me share the screen and tell me in detail. Let me explain. Out of rupees 2 lakh, we know that reversal would not be applicable on distinct person transaction. So 20,000, I can see the same PAN, but the GST number is different. They are raising the invoice. Yes. So 20,000, there is no requirement of reversal of ITC. What is the balance ITC? 180. 180, they have to reverse 50%. So 90,000, they have to reverse, and how much they can claim? 90 plus 20, the total claim is 1,10,000. I hope it is clear to all. एक बार confirm करें so that I can proceed to the next point. How much ITC they need to reverse or how much ITC they are eligible to claim, we have discussed. Normally, in case of the banking company, financial institution, NBFC, you have the option either go for actual Rule 40 to 43, straightforward. You can give the request to the jurisdictional officer that I like to opt for 50% reversal instead of normal calculation. Let me move further. 17 subsection 5 we will discuss at a later stage, not now, because 17.5 is very big in itself. ठीक है, तो 17.5 हम डिस्कस करते हैं, बट बिफोर दैट let me read the rule 38 and all other provision with respect to section 17. ITC of claim of credit by the banking company or financial institution. The banking company or financial institution, including NBFC, engaged in the supply of the service by way of accepting deposit, extending the loan, advances that choose not to comply with 17.2 in accordance with the option permitted in 17 subsection 4, then they have to follow the following procedure. What is that procedure? That said company or institute shall not avail the credit of tax paid on input and input service that are used for the non-business purpose, the credit attributable to 17.5, that is block credit, the said company or institution shall avail the credit of the taxes paid on input service referred to in second proviso to 17.4 and not covered under clause A. So whatever item are covered in the clause E, that you have to exclude. Balance item, if you have the eligibility on the balance item, if you think that it covered under the normal allowable category in the 17 subsection 5, it is not blocked, then they will avail. Okay. 50% of remaining amount of input tax shall be the input tax credit admissible to the company or the institution, and the balance amount shall be reversed in GSTR 3B. Okay. Rule 42. So any question? Let me see the question. Viraj, I think you are talking about different, opposite. I am saying in the last example, total 2 lakh. Out of the 2 lakh, 20,000 is allowable. The balance is 180. Out of 180, you need to reverse 50%. 90,000 you have reversed. The balance 90 would be available and 20 already available. So how much is the eligible? Total 1,10,000. How much need to be reversed? That is 90,000. But you have given the answer me just in the reverse manner. I hope it is clear. Concept is clear to you, right? Check. So let me start 17 subsection 5, then we'll gradually move to the rules also. 17.5 is talking about the block credit. Read the 17.5. It says that notwithstanding anything contained in subsection 1 of section 16, subsection 1 of section 18. It means it says that whatever it is written in 16.1, whatever it is written in 18.1, ITC not available if it is covered in the following item. Let me repeat once again. 17 subsection 5 is the list of items which are blocked. You are not allowed to take ITC. Anything contained in 16.1, 18.1, whatever it is written, it is overriding that provision. It means 16.1, if this particular item is in relation to your business, you cannot take the ITC. You purchase the motor car for your director only for the business meeting. ITC not allowed because 17.5 overrides 16.1 as well as override 18.1. The 17.5 is the list of the item which fall under the block category, like motor car, food, beverages, etc. Insurance. You are not allowed to take ITC, even though the condition or restriction which may be given in the 16.1 or 18.1 are satisfied. Point number 2. In the 17.5, they are saying first item motor vehicle. Which motor vehicle? All motor vehicle? No, sir. The motor vehicle which is used for the transportation of person. If the vehicle is transportation of goods, then ITC allowed or not? Tell me, if I have purchased the vehicle which is for transportation of goods, can I take the ITC? Answer is, what is the problem? See, 17.5 is blocking the which motor vehicle? Motor vehicle which is designed to carry the passenger. If it is for transportation of goods, what is the problem? If it is for transportation of goods, what is the problem? So, if the motor vehicle which is used for the transportation of person having approved sitting capacity, again, out of the vehicle for the transportation of passenger, all vehicle are not blocked. It says that normally the transportation of person vehicle are in the block category, but if that vehicle is having the capacity not more than 13 seater, not more than 13 seater, remember, then motor vehicle for transportation of person having approved sitting capacity of not more than 13 seater, it means that motor vehicle will be in the block category. If you are using for goods, no problem. If you are purchasing the bus 52 seater capacity, no problem. ITC allowed. The problem is only when the capacity is 13 seater or vehicle is the transportation of goods. Further, the proviso talks about the 3 items. If the vehicle is for transportation of passenger, if the vehicle is for up to 13 seater, what I will say, it fall under the block category right now. It fall under the block category, but here you have the 3 exception. Exception number 1, if you are engaged further supply of that motor vehicle, of such motor vehicle, which motor vehicle? The motor vehicle which you purchased, and you are engaged in the further supply of such motor vehicle. the transportation of passenger and imparting the training driving such motor vehicle. If you are covered in these exception, then still you can take the ITC. So when I can take the ITC, we have discussed three situations we are allowed to take the ITC. If the vehicle is not for transportation of person, it is for transportation of goods, ITC allowed. Second, if it is covered in any of the exception, if it is covered or it is used in any of the further supply, such motor vehicle, transportation of passenger, imparting the training or driving such motor vehicle. Which part, which condition we have left? If motor vehicle is having the more than 13-seater capacity, then ITC would be allowed. Then ITC would be allowed. Now let's move to the 17.5 AB. This clause was double A. This clause was not there since beginning. It was inserted on 1st Feb 2019. Vessel and aircraft making the following taxable supplies. Now they are saying, if you purchase the vessel and aircraft, obviously you can take the ITC on the supply itself for making the following taxable supplies. Pehla, further supply of that motor vehicle. Dusra, transportation of passenger. Tisra, imparting the training or driving of such motor vehicle. Fourth, it says that if you are providing the training on such motor vehicle or aircraft. And last is transportation of goods. Any doubt on this clause? Kindly ask. See, Aniket, in the below three situation, further supply, same motor vehicle is being sold or used or disposed of. If the vehicle is up to 13-seater and used for the transportation of person, then it is blocked. But if it is covered in any of the exception, further supply, used for the training, or used for the transportation of passenger, then even if it is 13-seat, less than 13-seater, even if it is passenger vehicle, ITC would be allowed. So primarily we can see in the clause, if it is belong to the same category of the outward supply, because we can say if we are purchasing the motor vehicle and you are using the further supply of that motor vehicle, ITC would be allowed. So in your question, Aniket, less than 13-seater, if it is used for the transportation of passenger, obviously yes, ITC would be allowed. Correct. Clear? Next is clause AB. Clause AB says, one minute. Clause AB of 17 subsection 5. It says that if you incur the clause AB says that if you incur the expenditure on account of the servicing, repair, maintenance, kiska, that motor vehicle, which motor vehicle, which has been defined in the clause A or the clause AA, meaning thereby, if it is clause A or the clause AA, if it is clause A or the clause AA, motor vehicle, allowable motor vehicle, then you can take the ITC of repair, जनरल इंश्योरेंस, रिपेयर, मेंटेनेंस एटसेट्रा, अगर वो रिलेट किससे करता है, वो मोटर व्हीकल. कौन सा मोटर व्हीकल? क्लॉज ए एंड द क्लॉज डबल ए वाला. कौन सा क्लॉज ए क्लॉज डबल ए वाला? विच व्हीकल इज द क्लॉज ए और क्लॉज डबल ए? आई कैन से द क्लॉज ए मीन्स, आई कैन से द क्लॉज ए मीन्स अप टू 13 सीटर वाला, ट्रांसपोर्टेशन ऑफ पैसेंजर. व्हाट इज द क्लॉज डबल ए? वेसल एंड एयरक्राफ्ट. करेक्ट. Further, it says, again, it means general insurance service, repair, maintenance is under the block category normally. If it is covered in that exception, clause A or the clause AA exception, it means if the vehicle is more than 13 seater, then vehicle allowed, na? Vehicle ITC is allowed. So you can take the ITC of repair, maintenance, etc. If the vehicle ITC is allowed, you can take the ITC of the repair and maintenance also. I talked about if the vehicle is being used for the transportation of goods, whether ITC is allowed. Whether ITC is allowed. Answer is yes, ITC allowed. You can take the ITC of repair, maintenance, etc. Normal funda is, if the original car ka ITC is allowed, you can take the ITC of the repair. If the original car ka ITC is not allowed, you can't take the ITC of the expenditure. For example, you purchase the car for your director up to 13 seater. Will you give the ITC? Please note, the motor car is being used exclusively for the purpose of business. Car for director only for business purpose, and it is 6-seater. ITC allowed or not? Business purpose. Will you give the ITC or will you not give the ITC? I can say, if the car is being used for the director only for the business purpose, this sentence is irrelevant. Why it is irrelevant? We have discussed in the 17 subsection 5, notwithstanding anything contained in 16.1. It means even if the car is being used for the business, not relevant. What is the relevant? Whether car is covered in the provision or car is covered in the exception. It is a motor car up to 13 seater, transportation of passenger. Yes. Is it covered in any of the exception? No, sir. Because it is not the further supply, because it is not the transportation of passenger, because it is not the motor driving, etc. Because it is not covered in any of the exception, then I can say the ITC of that car is under the block category. Therefore, if the ITC is under the block category, then we know that repair, maintenance, service, etc., that will also fall under the block category. Now the question is there any exception? Yes. What is the exception? If you are having the general insurance business, if you are having the general insurance business, then obviously the insurance of that motor car, you will take the ITC. Further, if you are manufacturer of the motor vehicle, then whatever the insurance, etc., would be there, that would be the only stock item. In these two categories, you are allowed to take the ITC. What is the two category? In the manufacturer of that motor vehicle. Second, in the supply of the general insurance in respect of such motor vehicle. Then ITC would be allowed. Let's move to the clause B. What is the clause B? Clause B is saying following supply of the goods or services or both are eligible ki block. Sir, 17.5 is talking about block category. It says that ITC shall not be available in respect to the following item. Now they say the following supply of the goods or services or both. Food and beverages, outdoor catering, beauty treatment, health service, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicle, vessel or aircraft referred to in the clause A or the clause AA, except when used for the purpose specified therein, life insurance and health insurance. What does it mean? It says that if you incur the expenditure on these items, we will not give the ITC. No problem. What are the items? Food and beverages. If we incur the expenditure, food and beverages, even though it is business expenditure, no ITC. Outdoor catering, same. Beauty treatment, health service, cosmetic and plastic surgery, leasing, renting or hiring of the motor vehicle, vessel or aircraft, leasing, renting or hiring of motor vehicle, vessel and aircraft referred to in the clause A or the clause AA. Fine. What does it mean? Leasing, renting or hiring of motor vehicle, vessel and aircraft. Which vessel, which aircraft, which vehicle? Sir, vehicle which is referred in the clause A or the clause AA. It means they are talking about the 13-seater vehicle. They are talking about transportation of person vehicle. It means if I have taken the bus on rent, I can take the ITC because it is not the vehicle which is referred in the clause A. Which vehicle is referred in the clause A? 13-seater wala vehicle. Which vehicle is referred in the clause A? Transportation of passenger vehicle. Let's say I have purchased the transportation of goods vehicle. You have given the answer ITC allowed. Let's say I have not purchased. I have taken on rent. The truck I have taken on rent for my transportation of business goods. Can I take the ITC? 100% yes. Because leasing, renting or hiring is under the block category. But when it will be under the block category? If it is for the vehicle, vessel, aircraft referred to in the clause A or the clause AA. except when used for the purpose specified therein, life insurance or health insurance. Provisos say that ITC in respect of such goods or services or both shall be available where inward supply and outward supply is same category and is an element of the taxable composite or taxable mix. These words are very, very important. See, these words are very, very important. Why I am saying so? Let's say I am making the supply the same nature. So I have the renting business. So wherein I have taken the car on rent and I am providing the car on rent. I can take the ITC because it is same category. I have taken the life insurance and my outward supply is life insurance. I can take the ITC. You know the subcontracting in the insurance sector. There's a concept of subcontracting. So if my outward supply is life insurance and I have outsourced certain part, I can take the ITC. Health insurance, I can take the ITC if my in and out are same category. I'm providing the beauty treatment. I'm providing the health services. I'm providing the cosmetic or plastic surgery. If it is taxable, outward, same nature, then I can take the ITC of the same nature, even it is covered in the clause B. Pehla. That is okay. That is clear to all. But what is the meaning of this? This is very, very important. Try to understand with the help of example. Sir, let's say I'm providing the repair services to the aircraft. I am XYZ Limited. Try to understand this example. You will able to correlate. I am XYZ Limited, who is providing the aircraft repair services, repair of aircraft, aeroplanes. My customer is British Airline. So, for the purpose of the repair of that aeroplanes of British Airlines company, this company has signed an agreement with my organization. And in the agreement, it is written that you will provide the repair services. Perfect, no problem. When you do the repair, you might take 2 hour, 3 hour, 4 hour time. Yes, I will require. During that time, you will provide the pick and drop facility to my crew member by using the car, let's say Mercedes. So what I have did, I have taken the Mercedes car on rent up to 13-seater. Perfect. They're also saying you will provide the food and beverages during the 4 hour time. Now, you tell me, if I will not provide the food and beverages, will my contract is complete? If I will not provide the pick and drop facility to Mercedes, will my contract is complete? क्या मेरा कॉन्ट्रैक्ट कंप्लीट होगा अगर मैं उसको कैब प्रोवाइड नहीं करता, मर्सिडीज फूड एंड बेवरेजेस प्रोवाइड नहीं करता, लॉन्च सर्विस प्रोवाइड नहीं करता? नहीं सर, कैसे हो सकता है कंप्लीट? नहीं हो सकता. इन दैट केस, this, what is the nature of the service? What is the nature of the transaction? I can say my nature of the service is nothing but the repair services. Nature of service is nothing but the repair services. Repair services. If my service is repair, but there is an ancillary component, it is main supply, principal supply, but there is ancillary component, food and beverages pick and drop, which are clubbed together, and I can say I am providing the combo of three supply: repair, pick and drop, and food and beverages. Basically, three supplies are clubbed together, and the combo can be composite or can be mixed. I'm not doing the argument whether it is mixed or whether it is composite, but I'm saying all the three component are clubbed together. All the three component are clubbed together and are being rendered to my customer as a bundled supply, out of which either there would be one principal and ancillary, then my combo would be converted into the composite, or it could be converted into the mix. I don't know. We have to see the fact and circumstances of each case. But whatever the case may be, if there is no one-to-one outward supply, it is not same category, but it is clubbed together as a composite or mix, I would be allowed to take the ITC all three component. I can take the ITC of the food and beverages. I can take the ITC of pick and drop facility. I can take the ITC of repairs if there is an inward supply, because I have the outward supply, not because of same nature, but yes, as a element of the composite or mix, yes, I have. So I can take the input tax credit. Is it clear to all? Very, very important discussion. Very, very important, I can say. Out of this complete clause B, this wording, this composite or mix, it is important. Clear to all? Any doubt? So fine, move further. मैम एक सेकंड, मैं एक बार देख लेता हूँ. Is it clear to all? Aniket, clear? ठीक है. Now the next point is under the block category clause B, we are talking about membership of the club and fitness center, travel benefit extended to the employee on vacation such as leave, home travel, concession, etc. Proviso says that input tax credit in respect of goods or services shall be available when it is obligatory for an employer to provide to its employee under any law for the time being in force. For that, the circular 172 has been issued to clarify one biggest doubt for this particular provision. What was the doubt? The doubt was whether this proviso, which proviso, sir? This proviso says that if you have expenditure because of the compulsion, you incurred the expenditure because of the compulsion of any law. Let's say You are providing the food and beverages because of the Factories Act. You are providing the rent-a-cab services because of the Factories Act. You are providing the life insurance or health insurance, let's say because of the Workmen Compensation Act. When you are incurring the expenditure in any of the item above, if it is obligation as any other law for the time being in force, you can take the input. The doubt was the proviso is with respect to only subclause 3. Very interesting doubt, because the proviso is after the subclause 3. So the doubt is whether this employer-employee compulsion ka requirement is applicable only on this clause or all the clause. Because if I see the sequence, it is written after this clause, subclause. Circular 172 has clarified that this is applicable to the all subclauses. For the purpose of clause C, sorry. Okay. So this basically implies compulsion of under any law for the time being in force. This particular proviso is applicable to the entire clause B, whether it is subclause 1, whether it is subclause 2, or whether it is subclause 3. All the subclauses it is applicable. Let's move further. If this service is given separately, नहीं प्रेरणा अगर सेपरेटली दे रहा हूं, लेट्स से मैं रेंट ए कैब की सर्विस दे रहा हूं, मेरा इनवॉइस भी रेंट ए कैब का है, ठीक है, मैं पिक एंड ड्रॉप का इनवॉइस चार्ज कर रहा हूं, तब तो कोई प्रॉब्लम ही नहीं है ना, सेम कैटेगरी हो गया ना, सेम कैटेगरी में अलाउड है. इट इज अलाउड इन द सेम कैटेगरी एज वेल एज इट इज अलाउड इन द कंपोजिट और मिक्स कैटेगरी ऑल्सो. सेम कैटेगरी में तो कोई डाउट ही नहीं है. डाउट आता है कि कंपोजिट और मिक्स के रूप में तो क्या आईटीसी मिलेगा. द आंसर वुड बी यस, आईटीसी मिल जाएगा. इज इट ओके? प्रेरणा कोचर. Because if you go to the again proviso, it uses the word same category na, same category. So if you are making the invoice separately, then no problem, na, ITC allowed. Either you are billing separately or it is billed together as one item, then it is composite or mixed supply. It says that even in that case, we will give the ITC. That is the big point. If you are not billing at all, then you can't take the ITC by treating only business expenditure. Okay. Work contract service when supplied for construction of an immovable property, except where it is an input service for further supply of the work contract. If I am work contractor, no problem. Whatever the expenditure I will incur to provide my outward supply is work contract service. I can take the ITC whatever I have incurred the expenditure for providing that service. When ITC would be disallowed? work contract service when supplied for construction of an immovable property. When supplied for construction of an immovable property other than plant and machinery. It means plant and machinery ITC is allowed. If it is plant and machinery, ITC allowed. Otherwise, work contract service for construction of immovable property is under the block category. Let's say I like to construct my factory. So there could be the two way. Either I will give the entire work to, let's say, L&T, Larsen Toubro ko maine de diya. I've given entire work to L&T. Then once L&T will complete the work, he will raise the bill of work contract service to me. He will raise the bill of the work contract service to me. When he will raise the bill of work contract service to me, can I take the ITC? Answer is no, because it is construction of an immovable property. I can't take the ITC. But let's assume L&T has outsourced 40% of work to the another contractor. Then that contractor has raised the bill to the L&T. Again, that is work contract service. Construction of an immovable property. Question comes, can L&T take the ITC of bill raised by subcontractor to the L&T? Then I can say it is covered in this exception because input service is work contract service which is required for making the outward supply of the work contract service. So if it is an input required for output, I would definitely be able to take ITC, no problem. Now, second pattern, let's say I have not given the entire work to the L&T this time. What I have did, I have purchased the bricks, iron rod, cements, buzzery, etc. Every item individually I have purchased. And I have engaged the housekeeping company to provide the labor. Perfect. Now, there is one tax invoice for the service, labor service. There is couple of tax invoice for the goods. So, this time I am not constructing. No, I am constructing, but I am not outsourcing that work. Rather, I myself ensuring the complete work under my supervision. In that case, what happened? The individual purchase of the goods or services. Can I take the ITC? The clause D says goods or services or both received by a taxable person for construction of an immovable property. For construction of an immovable property other than plant and machinery, even on his own account, including when it is used in the course or furtherance of business. So whether you outsource, then you will receive the bill of work contract. Whether you purchase individual goods or services, if it is for construction of an immovable property, ITC not allowed. What is the meaning of construction that has been given in the explanation? Explanation says, for the purpose of this clause C and the clause D, the expression construction include capitalization. Construction include reconstruction, renovation, alteration, addition, repair, etc. Not etc. But these items, because it is an inclusive definition, it can cover any item. But it says to the extent of capitalization. It means if I have received the work contract service ka invoice, or if I have received the goods or services, let's say I'm not capitalizing. Let's say I'm debiting to my profit and loss account. Is there any disallowance of ITC? In that case, no blockage. No blockage. Because blockage would be applicable. Blockage would be applicable only when the expenditure is being capitalized to that immovable property. So what we have discussed, let me summarize once again. (17.5)(c) and (17.5)(d) is talking about construction expenditure. Construction of immovable property. Construction of immovable property. First, what is the meaning of construction of an immovable property? It talks about the inclusive definition. Reconstruction, innovation, alteration, repair, etc. But to the extent of capitalization. Meaning thereby, if any expenses incurred in the clause C and the clause D, if you are debiting to the profit and loss account, you are sure that you can capitalize. If you are capitalizing, then block. If you are debiting to the profit and loss account, not block. So it means every construction expenditure is not blocked. Debited to PL, allowed. Debited to the capital asset, not allowed. Is that clear? Now try to find out. I'm asking one question and giving you 2 minutes. I'm asking one question, giving you 2 minutes. The particular relevant page is in front of you. Read the respective page and give me the answer. Situations when ITC would be allowed. You have to tell me when the ITC would be allowed in the clause C and the clause D. There could be the multiple point. There could be 4 point. You are requested to give me the answer each and every possibility where ITC would be allowed. They are not blocked in the clause C and the clause D. I'm giving you 2 minutes. So 1913 why? So I will give you 2 minutes. 1915. I'll wait for your answer and then give the reply. If you have any doubt, you are requested to ask. But I hope question is clear now. Question is that in the clause C and the clause D, when the ITC would be allowed? That is the simple question. You have the clause C and the clause D and the explanation in front of you. You have to tell me 4 situation, 3 situation. You all are requested to connect with me on LinkedIn profile. My name is Arun Chajar. Please add me in your network. The purpose so that I would be come to know that whenever you clear your exams or whenever you grow in your career. So my humble request, please add myself in your LinkedIn profile. No marketing because I'm not providing any teaching other than board of studies. No teaching, not at all. Only providing the classes to the CA inter or the final through only board of studies, not taking any class, any private. And but I would like to know whatever your status of your result. Have you cleared? Which group is cleared? Have you become chartered accountant? So I would be much more happy when you cleared your exam and I'll see your status. So that is the only reason. Yes. Give me the answer. The situation when ITC would be allowed. Aniket has given two component, two possible view. Yes, both are correct. Very nice, Aniket. I like to listen from each and everyone. I like to see the reply from each and everyone. Please give the answer. What could be the situation wherein ITC will be allowed for the expenses incurred is covered in the or is of the clause C and the clause D? That is my question. Aniket, still I need some more. There could be the 2, 3 possibility more. Fine. Let me give the answer. The first point, if it is not construction, if it is not construction, what does it means? The construction means capitalization. But I have debited to the profit and loss account. ITC, ITC would be allowed. Construction means capitalization, right? If I have not done the capitalization, then can I take the ITC? 100% yes, you can take the input tax credit if you not done the capitalization. Second, if it is related to the plant and machinery, if it is related to the plant and machinery, first I am debiting the expenditure to the profit and loss account, allowed. I am incurring the expenditure for plant and machinery, it is excluded, ITC allowed. Third, if it is work contract service and my outward supply is also work contract service, if it is related to the work contract service and my outward supply is also of the same category, in this three situation, ITC would be allowed, otherwise not allowed. Is it clear? See, please note, construction include reconstruction, renovation, addition, even alteration or even repair is also construction. Repair is also construction. And it should be, fourth, you can say it should be immovable property. It should be for immovable property. Let's say the property is movable. You have incurred the expenditure, debited to the balance sheet. You have not debited to the profit and loss account, but that is not on immovable property. Again, I can say ITC allowed. Is that clear to all? एक बार confirm करें. So now let's take a break of 15 minutes. We will resume at 7:35 p.m. अशोक जी आप ब्रेक We are talking about again, see 17.5 block credit. We have discussed 17 subsection 5 clause A, B, C, D. Now, what is E? It is very simple that goods or services which are used for personal consumption. If you are using any goods or services for personal consumption, ITC would not be allowed. Clause H says that goods lost, stolen, destroyed, right of disposed of by way of the gift or free sample, then ITC would not be allowed. And then any taxes paid in accordance, sorry. Clause E says that goods or services on which tax has been paid under section 10. It means composition levy. If you are registered under composition levy and you pay any taxes, you are not allowed to take ITC. Correct. Then clause F says that goods or services both received by the non-resident taxable person except on goods imported by him, then ITC not allowed. So if non-resident taxable person, he is registered in the GST, he can take the ITC, but only of import. If he's purchasing locally, he can't take the ITC. Clause FA, goods or services or both received by the taxable person which are used or intended to be used for activity relating to his obligation under corporate social responsibility referred to in section 135 of the Companies Act. Meaning thereby, goods or services are both received by the taxable person which are used or intended to be used in relation to the CSR activity. If you are doing certain corporate social responsibility as per section 135, for that purpose, if you use the goods or services, you can't take the ITC of that expenditure. Clause G, we have discussed that goods or services used for personal consumption, ITC not allowed. And H, goods lost, stolen, destroys as a sample, gift, free sample, ITC not allowed. And any taxes paid in accordance with the provision of section 74, 129 and 130, ITC not allowed. Government may prescribe the manner in which credit referred to in subsection 1 and 2 may be attributed. Explanation says, now this explanation is important for the purpose of this chapter and chapter 6. The expression plant and machinery means apparatus, equipment, machinery, which is fixed to earth by foundation or by structural support, that are used for making outward supply, that are used for making the outward supplies, and include such foundation and structural support but exclude. It will include foundation, it will include structural support, but it will not include civil structure. If any land, building or any other civil structure is being required for plant and machinery, then it will not be called as plant and machinery. You cannot take the ITC of these civil structure. Telecommunication tower will not be considered as plant and machinery. And please note, pipeline led outside the factory premises. If it is inside, no problem. It will be plant and machinery and you can take the ITC. If it is outside, then ITC would be not allowed because it is not plant and machinery. Any question? Let me see the question. I have not seen. ठीक. We'll move to the rule 42. Rule 42, what it says? We have to spend sizable time on the rule 42. We'll discuss one by one. So first we will read theory. It will take some time, and then we will read the analysis, and finally we will do practical case study either today or in the next class. The input tax credit on input or input service, because we are reading the rule 42, so it is not applicable on capital goods, which attract the provision of 17.1 or 17.2, which attract the provision of 17.1 and 2. 17.1 is if I am using my common ITC for two purpose. One is business purpose, one is non-business purpose. Second, if I am making two types of the supply, one is taxable supply, one is exempt supply, then ITC to the extent of business purpose, ITC to the extent of taxable supply would be allowed. Then it says that for the provision of 17.1 and 2, being partly used for business purpose and partly used for other purpose, or partly used for effecting taxable supplies, including zero-rated supplies, and partly for effecting exempt supply, then the ITC of input and input service shall be attributed in the following manner. What is the manner? They are saying, first try to understand this one point I will explain, and then we will read the provision. It says that please, so this is my total input tax credit is T. T is total ITC. Out of which I will bifurcate some part to whom I will call as T1, T2, T3, then T4. What is the T1, T2, T3, T4? We will discuss. First, try to understand the structure, then we'll go to read the provision. This is the total ITC of your business, which we are using T. Out of the T, you are giving some portion of ITC you are naming as T1, exclusively for non-business purpose. T2 is exclusively for exempt supply. Exclusively means one-to-one relation. Exclusively block credit. T is the total basket of your input tax credit. Out of the T, you are removing certain part which are exclusively non-business activity. You are removing the ITC of input or input service which are exclusively linked to the either non-business or exempted or block category. You are removing that. So out of T, you are removing T1, you are removing T2, you are removing T3. The balance is called as C1. In the C1, you are removing T4. You are removing T4. So what is the balance? Let's say this is the balance value, and this is called as C2. What is the T4? Exclusively linked to the taxable supply. What is the meaning of exclusive? So let's say I am providing, let's say I am explaining the meaning of exclusive. Say Mr. A is providing the milk supply, which is exempted in the GST, and let's say he has some kirana soap, and which is taxable. He has purchased packing material for making the supply of milk. He has purchased certain plastic thali, plastic bag, so that he can put in the milk ka packet and make the supply. So I can say the packing material ka ITC is exclusively linked to the exempt supply. Similarly, let's say shop he has on rent. Whatever the rent he pay, I can say it is T4. ITC exclusively linked to the taxable supply. ITC, let's say this Mr. A purchased a motor car up to 13-seater. He has purchased a motor car up to 13-seater. I can say it is nothing but the T3. Out of the total ITC, he has to remove, out of the total ITC T, he has to remove 1-to-1 ITC, which is linked to the taxable exempted non-business block. While he remove the T1, T2, T3, then balance called C1, and out of that he will remove T4, then balance is called C2. What is C2? It is nothing but the common ITC. It is nothing but the common ITC. क्या करना है इसका? What we need to do? C2 multiplied by E divided by F. What is the E? Exempt supply. What is the F? Total supply. Total means exempt plus taxable. What we are doing by this formula? Basically, we are saying C2 is the balance portion of the ITC. Try to understand. Out of the total basket, you have removed the ITC, which is either linked to the non-business or exempted or block or taxable. 1-to-1 correlation, exclusively linked. You have removed that. What is the balance portion? It is called as C2. C2 is nothing but the common credit. You will apply the formula E divided by F. E is exempted supply, F is the total supply. What you are doing? By this formula, you are calculating the common ITC pertain to exempt supply. Common ITC pertain to exempt supply. Why you are doing? I am doing because of 17 subsection 2. I am doing this because of 17 subsection 2. It says that if you have two types of the supply, taxable as well as exempt, you can take the ITC to the extent of taxable supplies. So to the extent of exempt, I need to reverse my ITC. What is this? C2 multiplied by E. E is exempted, F is total. Basically, I am calculating the proportionate funda. I am calculating the proportionate ITC. To the extent of exempt supply. So this I have to reverse. Whatever the value comes, this I have to reverse. Now, they are saying C2 multiplied by 5%. What is the 5%? Can you calculate what is the sale of the business and non-business? See, try to understand 17 subsection 1 and 17 subsection 2. This is basically talking about apportionment of ITC. Why 17.1? Business purpose and non-business purpose. Why 17.2? Because some taxable supply and some exempt supply. Some taxable supply and some exempt supply, right? So, (17.1) and 17.2, it says that business and non-business, taxable and exempt. See, we have applied the formula C2 multiplied by E divided by F, exempted divided by total. Why we have done so? Because the requirement of this, you can take the ITC to the extent of taxable. So to the extent of exempt, I have to reverse. So you can calculate the value for 17.2 because you have the turnover. Now, how to calculate the business purpose and non-business purpose? Is there any value? No. Is there any sale of the non-business or business? No. So therefore, the rule 42 has given 5%. Rule 42 has given 5%. Rule 42 has given 5%. 5% denote non-business use. So effectively, I can say they are saying 95% is business use, 5% is non-business use. You can reverse that particular component. So basically, it is D1 and D2, which you need to reverse. Now, let me start the, directly we will come to the explanation. We will do the reading and then we will have the more strong understanding. Till now, any doubt? Can you please ask any doubt? If you have any doubt, kindly ask. ये वाला बात क्लियर हुआ क्या? Does it make sense or no? अब मैं डायरेक्टली आ रहा हूं जहां पर एनालिसिस है. Where there is an analysis, I will come to that. Clear till now, na? Great. Thank you. Now what it says, compute the common credit. Total input tax involved on input and input service, we are saying T. Okay. Input tax on input and input service that are intended to be used exclusively for non-business. It is saying T1. Remove. Why we are removing? So that we can calculate common credit. Why we are calculating common credit? So that we can apply formula. Why we are applying formula? So that we can calculate how much ITC need to be reversed by the taxpayer as per the rule 42. Less input tax on input and input service that are exclusively linked to the taxable supplies, exclusively for the non-business, exclusively for the exempt. And further, they are saying that input and input service which are eligible for credit, block credit, so that is T3. ITC, that is balance ITC, input tax on input and input services are eligible, ineligible for the credit, that is block credit, ineligible, block credit, correct? We have discussed T3. Now the T1, T2 and T3. Once you will remove, then balance portion will be C1. Now, out of C1, you will again deduct T4. What is the T4? Exclusively for taxable supplies and including zero rated supply. Why including zero rated? Because in the 17 subsection 2, you read the meaning or you read the lining, correct? You read the content. It says that taxable supplies including zero rated and exempted supply. For the purpose of 17.2, the zero rated supply is considered as taxable supplies only. Common ITC available for apportionment. So T1, T2, T3 and T4 will be determined and declared by the registered person at the invoice level in the GSTR2 and summary level in the GSTR3. Now the concept of GSTR2 has been removed. See, the GSTR2, GSTR3, etc., that was only in the rules. That was not practically available in the portal. And finally, they have omitted. So you will come to know that GSTR2, 3, etc. See, it is there in some part of the law, but because it is to be amended, but that is not practically possible. So instead of 2, we need to do at in GSTR3, 3B, where ITC on input and input service used partly for non-business and exempted supply can be segregated at invoice level. Same will be added to T1 and T2 respectively, and balance credit will be added in the T4. ITC on input and input service used partly for non-business purpose and exempted supply can be segregated at invoice level, and same will be added in T1 and T2 respectively, and balance will be added. Balance means because if you are segregating which are non-business or which are exempt, so that will be added in T1, T2. Balance means that is taxable. Balance portion means that is taxable supplies. That is being used for the taxable supplies. So that will be added in the T4. The portion definitely as pertaining to the taxable supplies in C2 will be allowed as ITC. Example on how to arrive at the amount of the common credit C2. Making an assumption that Hawaii slipper are exempted. Take a case of Easy Footwear manufactured the 2 varieties of the Hawaii slipper and 5 varieties of the sandal and shoes. Dyes are used in the manufacturing of all the footwears. However, bright pink is used only for the one of the Hawaii varieties, and the black is used only for the sandal and shoes. Blue and yellow are used for all varieties. Brown is used for non-business purpose. Now, they are saying input tax on the brown dyes 10,000 because it is non-business, so it is T1. Bright pink is used for which purpose? Let's go above. It says that bright pink used only for the one type of the Hawaii varieties, and the Hawaii varieties are Hawaii slippers are exempted. So I can say this bright pink, which is used only for the Hawaii varieties, I can say this is T2. Now, black is used only for the sandal and shoes. So sandal and shoes are taxable. So I can say it is T4, right? So if what is the T1? Exclusively non-business. What is the T2? Exclusively exempted. What is the T3? Block credit. Okay. And what is the T4? Exclusively taxable. So T4 is taxable. Now let's say, and input tax on blue dyes is 1 lakh. Blue and yellow are being used commonly, right? Am I right now? So let's see that blues and black is used only for the sandal. Blues and yellow are used for all the varieties. So it is a common ITC. So the total ITC, that is T, if you make the total 1 lakh plus 15,000 plus 40,000, 1 lakh, 90 plus 10, 1 lakh, 40,000, 2 lakh, 40,000, 2 lakh, 55,000. What is the T? 2 lakh, 55,000. Out of which, what is the T1? T1 is 10,000. What is the T2? T2 is 90,000. What is the T3? Not given. What is the T4? It is being given, that is 40,000. So if you remove T1, T2, I can say C1 is 1,55,000 because T minus T1 minus T2 minus T3. And what is the C2? If you remove the T4 from the C1, then 1,15,000 would be the C2. Or other way, you can calculate only the blue and yellow. That is also the one way to calculate, but we are going as per the mechanism given in the rule 42. So C2 is the common credit. It has to be apportioned as given in the steps 2. What is the steps 2? Compute credit attributable to exempt supply E by F, that is D1. Okay, multiplied by C2. E means aggregate value of the exempt supply. F means total turnover, exempt plus taxable, right? And if the registered person does not have any turnover, so please note, if they does not have any turnover during the said tax period, the above information is not available, the value for the last tax period may be used. Rule 42 says, suppose you do not have, see this calculation, C1, C2, T1, T2, T3, D1, D2, etc. has to be done for each tax period separately. Okay? When you are calculating the value and for particular month, there is no value. Let's say there is no turnover of exempt supply or taxable supplies. Then you cannot calculate E by F, correct? So they are saying, go to the last tax period, whatever the ratios, whatever the turnover are there, please use same turnover for computing D1 and D2, the reversal component. Hence, exempt supply include RCM, transaction in securities, sale of land, sale of building, where entire consideration is received after CC or first occupancy, whichever is earlier, and supply of the warehouse goods before clearance for home consumption, thus ITC attributable will need to be reversed. What is the mean? From where they have picked up this meaning? 17 subsection. Shall I go back to the 17 subsection 3? Let me go back. What is the value of the exempt supply? Remember fully. Remember all the component of this 17.3. Value of the exempt supply shall be as may be prescribed and shall include supplies on which recipient is liable to pay the tax. So it is my outward supply, but you need to pay the tax. So this outward supply will be considered as exempted in my hand. Transaction in securities, sale of land and subject to clause B, para 5, schedule 2. So in totality, I can say sale after CC, sale after completion certificate. Then, according to the explanation, you will add the value of the activity which is covered in the para 80. That is sale of custom bonded warehouse goods before clearing the home consumption, before filing the bill of entry for home consumptions. Okay. So let's go back. If the registered person does not, yeah, that we have completed, correct? Sorry. Now, I hope it is clear now. Here the exempt supply include outward RCM, transaction in security, sale of land and completed building, and sale of warehouse goods before clearance for home consumption. ITC attributable to these supply, which is exempt supply, need to be reversed. Here exempt supply exclude. What is being exclusion? see, now this is important. This is excluded. Why it is excluded? Because it has been given in the explanation. It has been given in the explanation to the Rule 43. It says that for the purpose of Rule 42 and Rule 43, the explanation says that following are not considered as exempted supply. It means actually these are exempt supply. Actually, this is exempt supply, but only for the purpose of reversal. This will not be treated as exempt supply. It means I can say in other words, not require the reversal of ITC. First is supply of the service by way of extending deposit, extending loan, advantage, where the consideration is either interest or discount. It means if there is an interest, there is a discount on long-term loan, advances, etc., then it is exempted in the GST. But because of this exemption, no requirement of reversal of common ITC. No requirement of reversal of any input tax credit because it is exempted, but for the purpose of reversal, it is not considered as exempted. Correct? Transportation of goods by vessel from customs station in India to a place outside India, that is exempted, but again, no reversal will apply. Duty credit script specified in the notification, this correct. ITC attributable need not to be reversed. So, kya hua? It means because of these items which are actually exempted, but not reversal, no reversal is required. Correct? So, interest, transportation of goods by vessel from India to out of India. And third is value of the duty credit is correct. Now, it's further says. Further point, aggregate value of exempt supply and the total turnover exclude the central excise duty, state excise duty, central sales tax, and VAT. Further, the value of the exempt supply for in respect of the land and building will be adopted as stamp duty, and for the security, it will be the 1% of that sales value. Let's read little bit so you have the clarity. So presently the central excise duty is leviable on the manufacturer or production of the tobacco, petroleum crude, diesel, petrol, ATF, natural gases. State excise duty is leviable on the manufacture production of the alcoholic liquor, opium, Indian hemp and narcotic. Then third, VAT and CST is leviable on interstate or interstate sale of the petroleum crude, diesel, 5 specified petroleum product. So central excise duty is on tobacco plus 5 petroleum product. State excise duty is on alcoholic liquor. That's it. Plus third is VAT is leviable on intra or inter of the petrol. Then these 5 specified petroleum product are presently non-taxable and alcoholic liquor is outside the ambit of the GST. Therefore, supply of both these products being non-taxable will be exempted supply as per section 247. What is the meaning? If you read the definition of exempt supply as per section 247, it includes 3 types of the supply. Nil rated, correct, exempted by notification, and non-taxable supplies. What is the non-taxable supplies? Non-taxable supply is nothing but the 1 plus 5. What is 1 plus 5? Alcoholic liquor for human consumption and 5 specified petroleum product, petrol, crude, diesel, aviation turbine fuel, natural gases. Okay. So whether non-taxable supply is an exempt supply as per section 247, answer is 100% yes. So it says that the supply of both these products being non-taxable is exempted, and taxes, duties leviable thereon will be excluded from the value thereof for the purpose of apportionment of credit. So they are saying this, yes, exclude the value of the taxes. Example on how to apportion common credit into the credit attributable to exempt supply. Same, Easy Footwear, which manufacture 2 variety of the exempt supply, that is Hawaii Sleeper, and 5 varieties of the taxable supplies and shoes, has the following turnover in the quarter. In the October, okay, what is the turnover of Hawaii 1 plus Hawaii 2 is equal to 3 crore. And turnover of all variety of the taxable 2 crore. What is the F? F is total turnover 5 crore. And what is the E? E is 3 crore exempt supply. In this ratio, you will apportion 1,15,000. If you will apportion 1,15,000 in the ratios of 3:5, can you calculate and tell me in the chat? Can you calculate and tell me 1,15,000 multiplied by 3 divided by 5? So 5 60%, na 60 15 69,000. So what is 69,000? 1,15,000 it is the C2 common credit multiplied by E divided by F. What is E? We have calculated, it has been given that E is the 3 crore and F is the total turnover, 3 plus 2, 5 crore. So in this ratio, I have a portion, so 69,000 is nothing but the D1. And common credit attributable to the non-business purpose is 5%. If any. So I can say the common eligible credit, compute eligible credit. So I can say the total common credit C2 minus D1, that is exempt C2 multiplied by E by F, and D2, that is 5%. So once you remove all these components, then it is called as C3. C3 would be eligible credit out of the common credit. Compute C3 separately for ITC of CGST, SGST, UTGST, IGST. Compute summation of D1 plus D2 reversal for the whole financial year by taking exempted turnover and aggregate turnover for the whole financial year before the due date of filing the return for the September following the end of the financial year. C. You remember? Can anybody tell me what is the last date to take the ITC? Can anybody tell me what is the last date to take the ITC as per 16.4? What is the last date to take the ITC as per 16.4? Okay. Aniket has asked 2 questions. Difference of input and input service. See, input means goods other than capital goods. So for example, to provide this service, I have purchased the pan. Okay. So this pan is nothing but the input. But I have taken that particular building on rent. So the invoice of rent is input service. See, I have total 3 invoice. One is laptop. So laptop is a capital goods. One is pan. So pan is a goods, but I will not capitalize in the books of account because it will work only for 6 months. So it will be the goods, but not capital goods. So it is called as input. What is the input service? Input service means other than goods. So I have taken the building on rent to provide my output supply. So that rent ka bill, consultant ka bill, advocate ka invoice, all these would be input service ka bill. And you have asked one thing, that will it be done monthly or yearly? 2 times. Please remember, the calculation would be done 2 times. First, you calculate on every tax period by taking the monthly data. You have the some amount of exempted turnover, some amount of taxable turnover, some amount of ITC during the tax period. So you will calculate the reversal as per the rule 40 to 43 first on every tax period. Second, once year is completed, you will recalculate again, and but this time recalculation would be done on taking the annual figure data. So when you calculate the annual data, that will be the final. That would be the final. So one point I like to highlight, at every place, the last date, which was earlier September month due date, now extended to the November. You talk about 16.4. Time limit has been extended to 30th November. You talk about 34 subsection 2. Time limit to declare the credit note. Again, that has been extended to 30th November. Go to the rectification of GST returns. Time limit has been extended to November. But please note, in the rule 42, still it is September. In the rule 42, it is still September. So what is that? So it means when you take the yearly data and recalculate the amount, that is final amount. So let's say I have done the reversal on monthly basis, M1, M2, all month. Let's say I have done the reversal of 60,000. But at the year end, by taking the yearly data, amount comes 69,000. 69 is final. So there could be the two possibility. Either you have done the less reversal. If less, then kindly reverse balance amount. So you have done the balance amount of 9,000. Let's second possibility. You have already reversed 75,000. You have already reversed 75,000 on monthly basis by taking the data of from April to March. Totality may you have done the reversal of 75, but by taking the yearly data, your amount comes to 69. So 69 is final. How much amount you have excess reversed, sir? 69 minus 75. So I have done the extra reversal of 6,000. You can reclaim that 6,000 once again. Not once again, you can reclaim that because excess reversal done. Is it clear? So I have given the answer, Aniket. I have given the answer to both the question which you have raised. Is it clear? If I confirm. Shall we proceed? If D1 and D2 is more than amount already reversed every month, the differential amount has to be reversed in any month till September following the end of the financial year, plus interest at the rate of 18%. From 1st April of the succeeding year till the date of the payment. So after the end of the financial year, you have to done the reversal, and interest from April to till the date of reversal, it will be applicable. Then next point, if the amount reversed every month is greater than amount which need to be reversed, the additional amount paid or reversed, you can say, has to be claimed back as credit in the return of month not later than September of every in the next financial year. So that is the time limit to claim that particular amount. Okay. So rule 43 we will not discuss today. We will discuss in the next class. But rule 42 I have discussed in length. I hope it is clear. Now let's go down. This is yes, this we have discussed. This we have discussed. So let's say block credit. So fine. So what is the block credit? There is one good chart. Let me go to the chart. Let me read that particular. Some good analysis is there. Let's read that analysis. So we are talking about the block credit in 17.5. Amount ITC of the taxes paid on almost every input service capital goods used for supply of the taxable and our goods or services is allowed GST except small list of block credit. First, motor vehicle and other conveyance and related services. Motor vehicle and conveyance has been defined have been defined in the CGST. See definition in the relevant definition. Motor vehicle exclude vehicle running upon fixed rail. Exclude special purpose vehicle for being used in the factory or enclosed premises. Vehicle with less than 4 wheels fitted with engine capacity of up to 25 cc. Has railway, two-wheeler, three-wheeler with engine capacity of the up to 25 cc bicycle does not fall in the definition of the motor vehicle. Broadly, ITC is blocked on the motor vehicle, vessel, and aircraft used for passenger transportation service with certain exception. Further, ITC is allowed in the certain service relating to motor vehicle, vessel, and aircraft, mainly insurance, etc. Basic principle that motor vehicle, aircraft, vessel on which ITC is blocked, ITC on service is also blocked, that we have discussed, correct? Now, chart is very important. By this chart, we will again revise the entire concept which we have discussed. Goods or services on which credit is blocked, exception to goods and services in which credit is allowed, and remarks. Now, first item I am taking motor vehicle. You tell me, you like to show this, you like to me to show this to show on the screen the section 17 subsection 5 clause. So tell me when the ITC of motor vehicle would be allowed. Tell me the situation when the ITC on the motor vehicle would be allowed. All the permutation combination. Please tell me all the permutation combination wherein the ITC on motor vehicle would be allowed. मोटर व्हीकल का आईटीसी आपको मिल जाएगा किस सिचुएशन में? टेल मी द सिचुएशन वेयर इन if situation number 1, if it is up to 13 seater. So 1 second. So motor vehicle for transportation of person with sitting capacity 13%, including that driver, referred as ineligible motor vehicle. ठीक है. Ineligible motor vehicle will be used for 1 second. Ineligible motor vehicle when used for any of the following purpose: making further supply, giving the training, or making the transportation of passenger. Taxable supply is the transportation of passenger. Then you can take the ITC. These three purpose we are talking about the proviso to that particular point. Okay. Then they are saying ITC on eligible motor vehicle used for any purpose other than the eligible purpose not allowed. Then if the vehicle itself is more than 13 seater, ITC allowed. If the Vehicle is for transportation of goods. ITC allowed. Correct. These are the exception and these are the eligibility, ineligibility with respect to motor vehicle. Dumper, tipper, etc. used for any purpose, ITC would be allowed. Vessel and aircraft, same thing. If it is used for the eligible purpose, means further supply, training, imparting, driving, or that aircraft, etc., and further transportation of passenger, ITC allowed. When and goods also is covered. And when ITC on the vessel and aircraft used for the purpose other than eligible purpose is not allowed. Now, the general insurance, servicing, repair, etc. Normally, ITC is blocked. When it will be allowed? If the ITC of the original vehicle is allowed, you can take the ITC of these expenditure also. Such services relating to ineligible motor vehicle, vessel, aircraft, ठीक है, for eligible purpose, ITC allowed. Such service when received by the manufacturer or general insurance, ITC would be allowed. We remember that two exceptions are there, correct? So if it is used in the two exception allowed, if it is used for the exception covered in the main clause, ITC allowed. Then, okay. Leasing, renting, or hiring of the motor vehicle, vessel, and aircraft on which ITC not allowed. Normally not allowed. When allowed? If that motor vehicle is specified one, is using for eligible purpose, that we have discussed three purpose: further supply, training, or transportation of passenger. Then ITC would be allowed of that motor vehicle. ITC would be allowed of the expenditure. ITC would be allowed of leasing, renting, hiring also. Okay. Then ITC on the leasing, renting, or hiring is allowed. Okay. ITC on the such allowed case of the subcontracting. 1 second. Then we have discussed two concepts that further same nature. If you are having the inward supply for making the providing the outward supply, same nature, or composite or mix, then ITC would be allowed. Okay. So it says ITC on such services is allowed in case subcontracting, that is when such services are used by the taxpayer who is in the same line of the business, correct? And here the concept of one more point may come: composite supply or mixed supply. If you are providing, but it is as an element of the composite or mixed supply, then also you can take the input tax credit. One more point I like to highlight will come again at this page. Will come again at this page. Read this. 16.2 of IGST, point to be noted, IGST. It says that ITC may be allowed. See, if you are making the export, is it zero rated? Answer is yes, it is zero rated. Even export of exempted item is also called as zero rated supply. See, export can be taxable item or can be exempted item. It will always be called as zero rated supply. Once my supply is zero rated, it is taxable, and therefore I can take the ITC. 16 subsection 2 says that if you are exporting the exempted item, you can take the input tax credit. Let's read. ITC may be availed on inward supplies for making zero rated supplies, notwithstanding the exempt nature of the zero rated supply. So if I am exporting the exempted item, still I'm allowed to take the ITC. Zero rated is an expression that covers two kinds of the supply: export and SEZ. Developer, therefore ITC is available on the goods and or services used for supplies made in the course of export or SEZ unit or developer for authorized operation. ठीक है ना? Let me go back. The term leasing referred to in the table above refer to the in the above leasing of the motor vehicle, vessel, and aircraft only, not leasing of any other item. So this doubt was raised. So if you read the 17.5b, then it is saying leasing, then comma, leasing, comma, renting or hiring. So the doubt was whether it is covered leasing of motor vehicle or it is covered any lease. Say, let's say I have taken the my office on lease. So can I take the ITC? That was a big doubt, which has been clarified by the circular. They are saying, which has been clarified by the circular. They are saying that circular 170 to say that leasing, renting, or hiring are to be read with the word motor vehicle. It means leasing, they mean to say the leasing of motor vehicle, vessel and aircraft. Renting or hiring, they are talking about the motor vehicle, vessel and aircraft. They are not covering in entirety. They are not saying every type of the lease is blocked. No. If it is leasing, renting or hiring with respect to the motor vehicle, then only it is under the block category, otherwise not. We are not reading these point, and I will ask the question. I will ask inform the question. Okay. So food and beverages, I think there is no need to read. You have the soft copy. If I confirm, do you have the soft copy? Participant, kindly confirm. Do you have the soft copy of this material, right? Aniket is asking if it is used for transportation or if it is used for the transportation or in training or deal. Perfect. ITC is allowed. Right. Great. Do you have the soft copy of this material so that you can open that soft copy and I will ask the question. I will not ask the question which is written in the study material. I will ask the random question. You have to give the answer. So you can say that now we are doing the quick fire round of the question answer by which we are revise the entire chapter. So next 20-25 minutes are on the quick round of the question answer. We will do the entire revision of the today discussion. Okay. Ready? Question number 1. What are the 6 conditions for taking the ITC? This question is not pertaining to today class. This question is pertaining to last class. But we are revising entire section 16 and entire section 17. We are revising entire section 16 and entire section 17. So you have to give me the answer. Whatever the question we have discussed, whatever the point, whatever the provision we have discussed in the last class and in the today class. Only 2 class we had the 2 class on the ITC chapter. My question is, what are the conditions for taking the input tax credit as per 16 subsection 2? We have discussed 6 conditions. Please tell me all the 6 conditions in short. Please tell me all the 6 conditions for taking the input tax credit, which is being defined in the 16 subsection 2. So we know that we have read the provision of 16 in the first class. the provision of section 17 in 2-day class. So I'm asking first question that what are the condition for taking the input tax credit which is being defined in the 16 subsection 2? Yes. You should have the tax invoice, debit note, correct? Then it should appear in my GSTR 2B. Then you must receive the goods or services. Then tell me, friends. Then, wow, very nice, very nice. ITC which is appearing should not be restricted. So that condition is very tough, but yes, it is there. Recipient or supplier? I don't know, but GSTR 3B has been furnished. So invoice 2B, goods or services received, 3B furnished, and tax has been paid by the supplier and that particular part. Now tell me one thing. In the 16th subsection 2, there is last condition that GSTR 3B has been furnished. Kindly tell me, this 3B furnishing condition is on the supplier or on the recipient? ये किसके ऊपर एप्लीकेबल है, सप्लायर के ऊपर कि रिसिपिएंट के ऊपर? Answer is this is on the recipient. Correct. Now we know that there is a rule 37A. If see out of the 6 condition, which is the one condition that can be satisfied or that has to be checked on yearly basis? So we have discussed 6 condition in 16.2. Out of that, one condition is that this to be looked on yearly basis, not on monthly basis. Which condition is to be checked on yearly basis? Which condition to be checked on yearly basis, not on monthly basis? There are 6 conditions, correct? एक कंडीशन ऐसा जो मुझे ईयरली पे चेक करना है, मंथली पे चेक नहीं करना. The answer is absolutely correct. The answer is tax has been paid by the supplier to the government. Okay. Now we have read that if recipient has not made the payment to the supplier within how many days, then ITC need to be reversed. If the recipient has not made the payment to the supplier within how many days, then कितने दिन में पेमेंट अगर नहीं करता है, विद इन हाउ मेनी डेज इफ द पेमेंट इज नॉट मेड, देन ITC need to be reversed. Answer is 180 days. Answer is 180 days. Will it be with interest or without interest? Will it be with interest or without interest? Will it be with interest or without interest? The answer is absolutely correct. The answer is without interest or with interest. Answer is with interest. Answer is with interest. Now tell me, what is the last date to claim the ITC as per 16.4? What is the last date to claim the ITC as per 16.4? I am asking random question as per the section I'm going, I'm asking any random question. I'm not sure whether is there any means given in the anywhere or not. I'm asking random question. So my thought is that if I will ask the random question, you are giving the reply, then perfect. You are thorough about the chapter, the discussion which we had. What is the last date to claim the input tax credit? You already told. I have asked in between as well. You already told and correct. What was the last date to claim the ITC? That September has been gone. Last day to claim the ITC normal 16/4 की बात कर रहा हूं. I am talking about normal 16/4. Last day to claim the ITC is 30th November after the end of the financial year or annual return, whichever is earlier. Can you tell me the two situation where the last date to claim the input tax credit will not be applicable or will not apply? I'm asking the two situation or two circumstances on which the 16/4 ka limit would not apply. Last date to take the ITC ka restriction will not apply. Two situation wherein you can claim irrespective of the time limit of 16/4. When the 16/4 would not be applicable. 16/4 कब applicable नहीं होगा ये बताएं मुझे. The answer is one is any ITC which is reversed earlier. ITC which is reversed earlier, either as per Rule 37, that is 180 days, or as per 37A. What is the 37A? If the supplier not paid the taxes to the government by September, then you need to reverse by 30th November. Correct? Rule 37A. And this reversed ITC can be reclaimed as per section 41 subsection 2. For reclaiming, no time limit. Whether which type of the insurance you can claim the ITC or which type of the insurance are covered in the block category. Which insurance expenditure are allowable, which insurance expenditure are blocked. My point is, tell me some of the insurance of which you can take the ITC. Tell me some of the insurance which are under the block category. That is my question. Allow me 1 minute. Only 1 minute, please. Tell me which expenditure ITC, which insurance expenditure ITC you can take and which insurance is in the block category. Like life insurance and health insurance is in the block category. Motor car ka insurance is in the block category subject to the exception that we have discussed. And other insurance like travel insurance, like stock insurance, fire insurance, burglary insurance, you can take the ITC. Absolutely correct. To allow health block general category, general allow health insurance. That Mohammed Abdul has added one good question, good point. If it is required under any law, even health and life can be claimed. Suppose you remember that in the COVID, the Disaster Management Act was amended for certain days. Disaster Management Act was amended for certain days, and in which they have covered life insurance. If any company taken the life insurance in that period, which is being covered under the Disaster Management Act, ITC would be allowed of life insurance. Like workman compensation. Thank you so much. Perfect example. And Aniket, insurance ITC allowed if motor vehicle, etc. on which ITC. बिल्कुल बढ़िया, बहुत बढ़िया. Viraj, sir, for less than block and for other allowed. Excellent. All are correct. Now the next point is, can we take the ITC of the CSR expenditure? Can we take the input tax credit of CSR expenditure? Can we take the ITC of CSR expenditure? Can we take the ITC of CSR expenditure? So I have done the CSR because of section 135 of Companies Act. Okay. So I have incurred certain expenditure on goods service. Can I take the ITC? Answer is no. It is under block. What is the difference between Rule 42 and Rule 43? What is the difference between Rule 42 and Rule 43? Difference क्या Rule 42 और Rule 43 में? What is the difference between Rule 42 and Rule 43? डिफरेंस क्या है रूल 42 में और रूल 43 में? So correct. Rule 42 is for input and input service, and Rule 43 is for capital goods. Absolutely correct. Viraj, Sneha, Aniket, Abdul, everyone. Next point is, we know that for the purpose of reversal of input tax credit, the meaning of exempt supply has been widened. So normally we know the exempt supply has been defined in section 2 clause 47. We know that meaning of exempt supply is section 2 clause 47. Now, for the purpose of reversal of ITC, the meaning has been expanded. Okay, perfect. Now, first question, please tell me whether schedule 3 will be considered as exempted or not exempted. The schedule 3 ka transaction will be considered as exempted or not be considered as exempted. Kindly give the answer. The answer is in the schedule 3, only two para are considered as exempted, which is para 5, that sale of land and building. So building after completion certificate. Okay. And second is sale of warehouse goods before filing the bill of entry for home consumption. Rest all the entries of schedule 3 are not exempted, therefore no question of reversal. Do you remember the item which are exempted but reversal is not required? You remember that we have discussed the explanation wherein some entries are of exempt supply, but they are saying it does not attract the reversal of input tax credit. For the purpose of reversal of ITC, they are saying the word exempt supply will exclude these type of the item. Can you tell me which item are excluded for the purpose of reversal for the from the exempt supply for the purpose of reversal? Which item are excluded? Which item of exempt supply are not considered as exempted only for the purpose of reversal? Any idea? Any one or two? मतलब एक्चुअल में वो एग्जेम्प्ट है बट उसे एग्जेम्प्ट बट उसके लिए आईटीसी रिवर्स नहीं करना. वो एग्जेम्प्ट तो है बट आईटीसी रिवर्स नहीं करना. कैन यू टेल मी? दे वी हैव डिस्कस 3 सिनेरियो. Answer is first is interest on long-term loan advances. Second is transportation of goods by vessel from India to out of India. And third is duty credit scrip. 3 items are exempted, no requirement of reversal. Nini. Export SEZ, that is zero rated supplies. 17 subsection 2 says it is taxable supplies only. It is taxable supplies only. If you read the 17 subsection 2, it says that taxable supplies including zero rated. It means zero rated is considered as taxable only. Here, my question was completely on exempted supply, but no reversal is required. Perfect. Do you remember that how much percentage bank need to reverse if they are not like to follow 17.2? They do not like to opt rule 40 to 43. How much percentage they need to reverse? Answer is 50%. Can you tell me in the 50%, which item will not be counted? It means on which component the reversal 50% will not be required. Banking company not required to reverse the ITC on one item. Reversal is not applicable on one item. That 50% reversal is not applicable on one item. Which item? Answer is distinct person ka ITC. One pen multiple GST. We have given the example. If ICICI Bank has received the invoice from ICICI Bank other branch, distinct person, then they can claim 100%, no requirement of reversal of ITC. Can you tell me that construction of immovable property ITC would be not allowed? My question is, when it is not allowed, if it is debited to the profit and the loss account, then not allowed, or if it is capitalized, then not allowed, or in all situation not allowed? My question is, we know that construction of immovable property, it is covered in the block category. I'm giving you three options. If the construction expenditure is debited to the profit and loss account, then it is not allowed. If it is capitalized, then not allowed. If it is, or in both the cases, it is not allowed. It will not be allowed if it is capitalized. If you are debiting to the profit and loss account, no problem. You can claim the ITC. It should be revenue expenditure, not capitalized expenditure. ऐसा नहीं हो कि कैपिटलाइज को आप रेवेन्यू में डाल रहे हो फॉर क्लेमिंग द आईटीसी, दैट इज नॉट परमिसिबल. इलीगल एक्टिविटी इज नॉट अलाउड, बट लॉ के हिसाब से इफ इट इज कैपिटलाइज, देन ओनली, if it is capitalized, then only the ITC is blocked, otherwise not blocked. ITC on the two-wheeler can be claimed if it is up to so much of CC. ITC on the two-wheeler, when the ITC on the two-wheeler can be claimed subject to some condition for CC. कितना CC के नीचे अगर टू व्हीलर है तो यू कैन क्लेम द ITC. $25 cc, absolutely correct. 25 cc, absolutely correct. You remember the formula we have in the rule 42, we have calculated the common ITC, then multiplied by E by F. What is the meaning of E and what is the meaning of F in the formula? We have discussed the formula E by F. So my question is, what is the meaning of E and what is the meaning of F in the formula? What is the meaning of E and what is the meaning of F in the formula? C2 multiplied by E by F we are calculating. E means क्या है और F का मतलब क्या है? E means, what is the meaning of E? What is the meaning of F? Right. E means exempt supply, F means total supply. Last question for the day. Last question for the day. And before asking the last question, requesting everyone to connect on the LinkedIn social media. So I would be able to understand whenever you clear your exams. No marketing because I'm not providing any teaching to any other platforms. CA interfinal students other than Board of Studies. My last question, how much percentage we need to reverse if there is some non-business activity? If I'm using my ITC to the non-business purpose, how much percentage I need to reverse of C2? C2 का कितना परसेंट मुझे रिवर्स करना पड़ेगा if there is non-business use? This is last question. Right answer is 5%. Correct, 5%. Thank you very much. Good night to all of you. I hope it is clear. Viraj, I would only give one suggestion that please, when my lecture is there, only focus on the lecture, nothing to prepare the notes, etc. Not to prepare the notes at all. You have the lecture recorded. You can go multiple times, and that at that point of time, try to make the notes. Not now. At that point of time, when it is a revision, then make the notes. Not now. Good night to all of you. Thank you very much. अशोक जी, आज का क्लास कंप्लीट